In this free video course, you will learn everything you need to know about the Stochastic RSI for trading crypto, forex, stocks, or any other financial markets. By the end of this course, you will not only be able to use Stochastic RSI like a pro, but you will also learn multiple Stochastic RSI settings that most people don't know about. Alright, so let's begin this course by taking a look at what you can expect to learn from this video. And the very first thing we of course need to talk about is what is the Stochastic RSI in the first place. You might have heard of the Stochastic RSI, or at least you are probably familiar with the RSI indicator. But in order to use the Stochastic RSI correctly and as a result, take better trades and make more money, it's of course very important to actually know what the Stochastic RSI is in the first place. So we will spend just a little bit of time talking about that. Next up, in chapter 2, another very important thing we need to know before we can really start trading with the Stochastic RSI is of course to understand how the Stochastic RSI works. And in this chapter, we will talk about how the Stochastic RSI works. We will also talk about how it's actually related to the normal RSI indicator. Understanding this relationship between the normal RSI and the stochastic will definitely be helpful as you progress along this course. Next up, in chapter 3, what I want to take some time, talking about is one of the most common and one of the worst Stochastic RSI mistakes that you really need to avoid. So guys, this is definitely a chapter. Chapter 3 is a chapter you don't want to skip. And what I actually do recommend here is for the whole course, I really recommend that you watch the chapters in order. So start with chapter 1, progress to chapter 2, and watch all of the chapters, because I have built this course in a step-by-step manner. So to understand, for example, chapter 3, it's important to do chapter 2 before chapter 3 and so on. But I will, of course, also have timestamps. So if you are 100% that you already know a certain part, you can feel free to skip around in the video as well. In the next chapter, chapter 4, it's finally time to take a look at what, in my opinion, is one of the strongest Stochastic RSI trading strategies, especially here for beginners, and that is to learn about Stochastic RSI Divergence. Last but not least, if you are interested in diving even deeper and learn even more about the stochastic, chapter 5 is for all of you guys that really want to take your stochastic trading to the next level. Because in this chapter, we're going to talk about some advanced Stochastic RSI settings and strategies. So I will show you guys these settings in a step-by-step manner, and I will also talk about how these settings are different from the normal settings, and perhaps also in what trading environments some settings can actually be better, and in what trading environments you might actually want to avoid using the normal stochastic, and so on and so on. So chapter 5 also very important, but as I said guys, highly recommended to watch the chapters here in order, because the course is built step by step. Alright, so now then, what is the Stochastic RSI? Well, in super simple terms, the Stochastic RSI is an indicator that measures momentum. So just like, for example, the RSI or even the MACD, both the MACD and the RSI are also examples of momentum indicators. And what do we mean by momentum? Well, here on the image right here, we can see a chart, and the Stochastic RSI is down here on the bottom. So this blue and orange line down here, so below this part, is the Stochastic RSI. And I can actually already mention that just as with, for example, the RSI indicator, the Stochastic RSI goes in between a max number of 100 and the lowest number is 0 here. So we say that the indicator oscillates between 0 and 100. But as you can see here on the chart and on the indicator, you can see that when we see strong moves towards the upside, we will have high readings on the stochastic, and when we see strong and sharp moves to the downside, for example, you can see this move right here, a very strong and a very violent move to the downside, you can see that the stochastic indicator completely collapsed to the downside right here. And this is because momentum is basically the sort of speed, or should I say velocity, of price movements. And we will talk more about momentum here later on in this course. But for now, all you need to know here is that the Stochastic RSI measures momentum. Another thing important to know here is that the Stochastic RSI actually combines two powerful indicators, and we can hear it on the name. It uses ideas from both the stochastic oscillator and the RSI at the same time. And we do this to potentially deliver more precise buy and sell signals. And we will talk more about here, how the stochastic RSI works later on. But for now, all you need to know is that stochastic RSI combines ideas from stochastic and RSI. That is why it's called stochastic RSI. And yet another thing we can say right away here is that we can use the stochastic RSI for both spotting reversals. So we can use the RSI to try to predict when the price will reverse, like for example right here. But we can also use the stochastic RSI for continuations. So we can use the stochastic RSI to trade in the same direction as the trend. So this is one thing I like about the stochastic. We can use it for both reversals as well as continuations. But all right, so now we need to talk about something very important, and that is how the stochastic RSI and momentum is related. Or to be more precise, we're going to talk about how stochastic RSI and changes in momentum is related. It's a tiny bit different here, but it's actually very important. So first of all, the stochastic RSI, or for short, StochRSI. This is a sort of shortening I might use throughout the video, so feel free to write it down. StochRSI basically means stochastic RSI. But the stochastic RSI measures shifts in momentum. So what I said earlier was actually a simplification. The stochastic RSI doesn't really measure momentum directly, but it measures how momentum changes over time. And here, a simple definition of momentum is that you can think about it as the speed and direction of price movements. But now guys, let's actually remove my webcam, because now I want you all to look at this image right here. Here we have two things happening. First of all, we have the stochastic, or in other words, the StochRSI right here. So this blue and orange line, just as I showed you guys before, is the stochastic RSI. But down here, we actually have a normal RSI indicator. And to be more specific, on the stochastic RSI, we actually have some special settings. Because as you can see here, you can see that this stochastic RSI actually hits the maximum value of 100 for a long time right here. And it also hits the maximum value of 100 for a long time right here as well. And that's because we use some special settings that I will show you guys later on in this video. But for now, we just have to notice that we have some special settings. And the reason I have some special settings right here is because I want to show you guys the relationship between the stochastic RSI and the normal RSI. So let me actually show you guys the next point right here. And I'm going to delete the text for now, but you know which one is which. So what this stochastic RSI does is that it tracks, and listen closely, it tracks RSI's position in its range. So by applying the stochastic formula to the RSI, the stochastic RSI shows where the RSI is relative to the recent highs and lows. And this is one of these things that might, I can imagine that this sounds very complicated when you hear it the first time. But you will understand after this. So remember, this is the RSI, and the RSI is often based on 14 periods. This can be 14 days, this can be 14 5-minute candles, and so on, but it's usually based on 14 periods. And what the stochastic RSI tell us right now is where is the RSI relative to the last 14 days. So as you can see, the reason the stochastic RSI reaches the highest value right here of 100 is because at this point, so let's follow this point down right here, this point was the highest value that the RSI has reached during the last 14 days, and that is why we have 100 right here. And the reason we have 100 right here is once again because now the RSI went even higher, so it's still at the highest point that we have been during the last 14 days. But look what happened with the RSI from this point to this point. Now the RSI fell, which means that we are not at the highest point anymore. And as you can see, this leads to the stochastic RSI not longer being at 100. And this was the reason why I used the special settings right here. I wanted to show you guys how the stochastic RSI and the normal RSI interact with each other. Another thing you can just notice right here is of course that when we see strong momentum moves, you see very strong reactions on the stochastic. This is something that you can have in mind for the rest of this course. Alright, so before we continue here, I want to give a big shout out to all our new channel members. You guys are making these videos possible. I spend a lot of time and effort on these videos, so if you want to give back while at the same time getting access to exclusive content, please consider becoming a channel member by clicking join below this video or on the channel page. Now let's jump back into the course. But alright, so now it's finally time to take a look at how the stochastic RSI works. And as you can see right here on the screen, we have a zoomed in image of the stochastic RSI. And let's take a look at what all of these lines and everything you need to know here about the stochastic RSI. The first thing we need to know is the blue line. So what does this blue line actually mean? Well, the blue line, as you can see here, is called the percentage K line, or another word for this is the fast stochastic line. And this is the line that shows you where the RSI is relative to the last 14 days. So in order to understand this, it's very important to understand the previous slide. So the percentage K line is basically what we talked about in the previous slide, but the stochastic also has another line. This line is called the percentage D line, or in other words, the slow stochastic. And this one is very simple. The percentage D line is basically a 3-day moving average of the percentage K line. So if you look anywhere at the indicator, let's look right here. At this point, the percentage D line will tell you where has the percentage K line been on average the last 3 days. And this is also the reason why we call it a slow stochastic line, because the percentage D line will basically follow the percentage K line. So as you can see here, when the blue line is above the orange line will continue to go up, and it will go up until the blue line crosses below the orange line. As you can see, it crosses right here, and as long as the blue line is below the orange line will go down. Once again, it crosses right here, and this is the point where the orange line starts to move up. So this is the reason why it's called the slow stochastic. The orange line is basically following the blue line, or in other words, the percentage D line is basically following the percentage K line. But here we also have some other things we need to talk about. The first thing is the overbought and also oversold territory. And if you guys are familiar with the RSI indicator, you might remember that we usually say that overbought is when the indicator is above 70 and oversold is when the indicator is below 30. You can't really see right here, but just write 30 right there. But for the stochastic RSI, this is not true. For the stochastic RSI, we consider it overbought only when the lines are above 80. So this line right here is actually 80, and we consider it oversold when it's below 20. So this line right here is 20. This is yet another thing you can write down if you want. Overbought is above 80, oversold is below 20, and this line here in between, this blue area in between 20 and 80 is the sort of normal area. But one thing you will actually notice about the stochastic, and this will have implications for how we use the stochastic, is that the stochastic will actually spend a lot of time in both the overbought and oversold area. So is overbought and oversold actually the best strategy when it comes to the stochastic RSI? Well, you will learn more about that very soon. But alright guys, so now let's actually quickly move into TradingView, because now I want to show you guys my first stochastic RSI special settings. And by the way guys, if you haven't, for some reason, haven't gotten started with TradingView yet, I will make sure to leave a link both in the top of the description as well as the pinned comment. And you can use that link to try out TradingView Premium for free for 30 days. And you will also get a bonus if you later on decide to upgrade. And as I'm recording this video, Black Friday is actually coming up soon for TradingView, and this is by far the best time of the year to get TradingView. So if you are watching this video around Black Friday, make sure to check out the link, because the TradingView Black Friday is insane. It only happens once a year and it's up to 70% discount. So if you are on the fence about TradingView, I can't recommend it enough. But of course, guys, you're free to do whatever you want. But now then, to show you guys the settings, we of course first need to open up the stochastic RSI. And to do this, we want to head up here to the indicators tab. And you basically want to search for stochastic, just like this, and then RSI. And when it comes to TradingView, you will always find tons of different, you can see different stochastic RSI indicators that are created by other traders. But for this video, we are just gonna use the built-in standard stochastic RSI. You can feel free to start this one if you want to, but let's now open this one up. And now guys, to change the settings of the stochastic RSI, we wanna go down right here to the settings tab. And now, just to make it clear for you guys, I first want to go to the style tab, and I want to change the K line to be a bit thicker. I want to change the percentage D line to be a bit thicker as well. But the first setting I want to show you guys is the setting we talked about earlier, where we change percentage K to 1. And before we change the percentage K to 1, I want you guys to look at how the line is looking right now. So keep this image in your mind. Now we go to the settings and we change percentage K to 1. And now you can see that the line will be much more responsive. You can see that, for example, during pretty much this whole rally, you can see that the line reached 100, and pretty much during this, pullback, the stochastic line reached pretty much 0 here, and you can see that the line just responds to the price very quickly. And why is this the case? The reason for this, let's open up the normal RSI. So let's just search for RSI, open up the relative strength index, is because when percentage K is equal to 1, the RSI, or should I say the stochastic RSI, will just display where the RSI is relative to its range, and the range for the normal RSI is 14. To double check that the range is 14, we want to go back here to the settings, and you can see RSI length 14, stochastic 14. Make sure that this is true. But now you might wonder, okay, so now percentage K is 1, but what happens when we change percentage K to 3, because this is the standard setting? Well, now the percentage K will be a moving average of the RSI's position relative to the last 14 days. And yes, guys, I know that this might sound complicated, but you can basically think about it as, let's change back to 1. Now the line is much more responsive, but when we change to 3, we get a less responsive line because it's a moving average, but since it's less responsive, it can actually provide more accurate signals. So in my opinion, this right here is a much better setting, 3314. But remember guys, later on in this video, I will show you guys even more settings, so definitely stay tuned for that. Alright, so now it's actually time to take a look at something very important. And that is one of the worst stochastic RSI mistake that you need to avoid. Or to be more precise, I will actually show you guys 2 mistakes here, so make sure to really pay attention. The first mistake comes from, I would say, a misconception. If you guys have been, watching other videos about the stochastic, perhaps reading on the internet, you might have heard that when the blue line or the percentage K line crosses the orange line, this can be seen as a sell signal. And when the percentage K line crosses the orange line from below, this can be seen as a buy signal. So let's take a look here just how these signals performed. Well, let's take a look at the first sell signal. It appeared right here at the red candle, right? You can see that this was not really a good sell signal. Yes, the price fell a little bit here, but you would have probably not locked in any kind of profits. Maybe your target was all the way down here. And eventually you can see that the price pushed higher. So this was pretty much a failed signal. If we take a look at the next buy signal right here, yes, one could argue that this, this trade eventually played out and you could have locked in some profits. But in general, you can see here we had a sell signal, buy signal, sell signal, buy signal. And you can see that these signals would not really have been good unless you are like having a very, very tight risk to reward. So this is actually the first mistake I do want to point out to you guys, that I personally don't recommend to, use this as a sell signal and use this as a buy signal and so on and so on. This will just lead to many, many false signals and is a way too simplistic view. The other mistake I do want to mention is related to the overbought and oversold. So remember this territory right here above, remember it's above 80. So overbought here is when it's above 80. And we have oversold. Remember, oversold is below 20, right? My second mistake is that many traders will use these overbought and oversold conditions as buy and sell signals. So for example, when the stochastic is above 80 right here, many traders will see this as a sell signal. And this is actually a big mistake, because many times, in, for example, uptrends, you will see so many times the price being above 80 and being overbought, but the price still continues in that direction. The same thing is of course true for the oversold conditions. Oversold definitely doesn't mean that the price will reverse. The price can stay overbought and oversold for long periods of time. So be careful using the overbought and oversold conditions. If you use them blindly, that is one of the worst mistakes, in my opinion, that you can make. So make sure to be careful about that. All right then, so now it's finally time to take a look at one of, in my opinion at least, one of the best stochastic RSI strategies for beginners. And this right here is the stochastic RSI Divergence. And this might look complicated, but don't worry, I will walk you through it in a step-by-step manner. And there are 4 main types of divergences that you need to learn. The first divergence is called bullish divergence. And what is this and how do we find a bullish divergence on the chart? Well, in order to find divergence, we need to look at both the price and the oscillator. And in this case, our oscillator is the stochastic RSI. So you can think about all of these blue lines as the stochastic RSI. And to be more precise, what I do is that I use the percentage D line for divergence. Here, for this, different traders will have different strategies. Some traders use percentage K, but I actually use, at least for the standard settings, I use percentage D, and I will talk more about that later. But you can think about this as, you know, the stochastic RSI, or to be more precise, the percentage D. But what are we looking out for when we're looking out for bullish divergence? Well, here we want the price to print consecutive lower lows, while the stochastic RSI prints higher lows. And here, and this is very important, when you look at bullish divergence, you only look at the lows. The same thing is true for hidden bullish divergence. We look at the lows here. We only look at the lows. And for bearish divergence, both the regular bearish divergence and the hidden, we only look at the highs. So if you take away anything from this, is that bullish divergence, you look at lows, bearish divergence, you look at highs. But as I said, the regular bullish divergence, or simply called bullish divergence, we're looking out for lower lows on the price, higher lows on the oscillator. This is a bullish divergence and indicates a reversal to the upside. The hidden bullish divergence, however, is different. Here we want higher lows on the price, right? Lower lows on the oscillator, and this is a signal. This is not a reversal, because the price is already in an uptrend. This is a signal that indicates that the uptrend will continue, or in other words, it's a continuation signal. So both of these divergences very important to learn. So yeah, guys, if you want to, you know, just pause the video and repeat this, you can go to a real life chart and practice also, and pause the video and come back later. But now, what about the bearish divergence? Well, this is what we just recently talked about, but pretty much the opposite. A regular bearish divergence is when we have higher highs on the price, lower highs on the oscillator, and this indicates a potential reversal to the downside. Once again, notice here that we are looking at the highs. We're looking at the highs of both the price and the stochastic RSI. For the hidden bearish divergence, we already are in a downtrend because we are already printing lower highs. But here we're looking out for higher highs on the stochastic RSI because this indicates a bearish continuation to the downside. So these are all of the divergences you need to know right now. Now let's switch the attention here and take a look at a real life example. So now it's finally time to take a look at the stochastic RSI divergence trading strategy. And the indicator you can see here, as I mentioned earlier, this is the stochastic RSI, but we can only see the percentage D line. And when we later on in this video, when we take a look at my special settings, you will learn why we have the percentage D right here. In simple terms, it's basically because when we use percentage K with the standard settings, it will reach the highest and lowest values pretty often, and divergences will be pretty hard to spot. So for the standard settings, I do actually prefer percentage D. I'm not saying that this is, you know, the best way to do it, but this is just, in my opinion, it's much easier to find divergences using percentage D compared to percentage K. But if it works for you, definitely feel free to use percentage K. But now then, let's see if we can find any divergence here. So let's begin here by analyzing the lows. So here we have one low right here, right? And then we have a slightly lower low. But if you switch the attention to the stochastic RSI, you can see that we have one low and then a higher low. And when we have the price printing lower lows, while the stochastic RSI prints higher lows, what is this? Well, this right here is a regular bullish, right? This is a bullish divergence or bullish div, and this indicates a reversal to the upside. So very good job if you spotted this one. Let's analyze the charts further here. the price went up here, then we went down, and we pretty much printed a new low. So we have a, we have a higher low on the price. But what about the indicator? Well, we can see that it looks like the low of the indicator is around the same level here. So around the same level, maybe a tiny bit lower. And remember here, if this stochastic RSI was, even lower here, this would actually be a hidden bullish divergence indicating a continuation. And in this case, you can actually see that the price, we actually got one more push to the upside before the reversal. So this was a, not really a clear signal. One could argue that this was almost a signal, but not good enough in my opinion. But now let's analyze the highs here instead. So here we have, one high, two high. This is pretty much two highs at the same level. We can think about this almost as one high. Then right here, we print a lower high. You can see the high right here, also a high right here. So we can pretty much think about this as, one sort of high. So in this case, we have lower highs on the price, and we also have lower highs on the indicator. So we don't have a divergence. Same thing true. We have another high right here. So the price prints a higher high, and we once again have a higher high on the indicator. So far the indicator and the price have pretty much gone in the same direction. But if you look at the next high right here, you can see that now the price prints a higher high. But if we look down here to the stochastic RSI, we can see that the stochastic RSI actually prints a lower high. And do you remember what this is? Well, this right here is a regular bearish divergence, right? Or for short, bearish div. And this divergence indicates a reversal to the downside, and after the signal, the price completely collapse. All right, so now it's finally time to take a look at a chapter I have been really looking forward to, and I hope you guys have been as well. And this is where we look at the best stochastic RSI settings. And in this chapter, I will in a step-by-step manner share with you guys at least 3 settings here, and I will share with you guys in which settings are this setting better, in which setting are that setting better, and so on, because different settings can depend on what market you're trading, what time frame, and so on. So make sure guys to really pay attention. But the first setting we're going to take a look at is a more short-term setting here. And this setting is known as the 533. And if you think this sounds complicated right now, don't worry, because as I said, I will go over all of these settings in a step-by-step manner. Next up, the next setting we're going to talk about is a more longer-term setting. The first one is more suitable for, day traders, maybe are trading the 5-minute time frame or the 15-minute time frame, while the long-term setting is a much more long-term approach. But I know that I have many people watching these videos that are more interested in long-term approaches. This setting is definitely something for you, and even if you are a more short-term trader, I think it's good and important to learn about different settings, because this can actually help you even understand the settings better too. Last but not least guys, I will show you guys an automatic divergence signal. So this is how we can get automatic buy and sell signals on the stochastic RSI based on divergences. So this one definitely something I think all of you guys will be interested in. But before you watch the settings, I highly recommend, if you for some reason haven't already, that you watch the chapter about divergences. But now guys, let's dive right in. Alright then, so now we are once again back here in TradingView. And once again, I just want to mention that if you are watching this video around Black Friday, TradingView actually have some amazing Black Friday prices right now, up to 70% off. If you want to take advantage of that, make sure to use the link. It will be both in the top of the description as well as the top comment. This is by far the best time of the year to get TradingView. But now guys, let's take a look at the first stochastic RSI setting. And to change the settings, we of course first need to open up the indicator. And what we want to do here, we go to the indicators tab in TradingView. And now we already have the Stochastic RSI starred here. But if you don't have it starred, you just search Stochastic RSI like this. We do have multiple different indicators, and I will actually show you one special indicator later on in this video. But for now, you just want to open the normal Stochastic RSI. What I also want to do is that because this is a short-term setting, I do want to change the time frame. As you guys can see, we're right now looking at the British pound USD chart, but we are on a daily time frame. And because this is a short-term setting, I actually want to change the time frame. So let's go all the way down to the 5-minute chart. So now every candlestick on this chart represents 5 minutes. But now then, to change the settings of the Stochastic RSI, what you want to do is that you want to go down here and you want to press the settings button that looks like a cogwheel. So you press settings right here. And actually, the very first thing we want to do is that we want to go to the style tab, because in order for you guys to see the indicator more clearly, this is not really a part of the settings, but I do want to make the percentage K line thicker and the percentage D line thicker. As you can see, now the indicator is much more clear. So that was just a simple thing. But now, as for the settings, we have 4 different parameters. And if you have been following this course, you already know what the percentage K and percentage D is. And for this short-term setting, we actually want to keep the percentage K at 3, and we can also keep the percentage D at 3. The percentage D, we will return to that later on. But the most important part we want to change here is the stochastic length. And we want to change the stochastic length all the way down to 5. And you might wonder, why do we change this one to 5? And why does this make the indicator more short term? Well, remember what the stochastic length is. This is the period the stochastic indicator uses to determine the RSI's relative position. And yes, guys, this can be hard to understand, but I don't really know how to put it in a different way. Now the stochastic RSI will use 5 periods to determine the position instead of 14. And 14 is the standard settings, so changing this one to 5 will make the indicator react to movements much more quickly. By changing the settings to this, we can actually now click OK right here. We will see that the RSI indicator now moves much faster up and down. So we can actually open up another stochastic RSI just to compare. So as you can see, the new RSI with the new settings will move up and down much more compared to the normal setting here, which have much longer and slower movements. I hope this is clear right here. But now you might wonder, why could this be a good thing? Well, when it comes to faster stochastic RSI, the good thing here is that signals can appear faster and be much more clear. For example, what I already can see here, is that we actually did have some minor divergence before the recent reversal. You can see right here, when you are trading very short term, you usually are very zoomed in. And here you can see that, yes, we had a high and a slightly higher high, right? But if you look down to the new stochastic RSI with the new settings, you can see that we have a clear divergence. The price prints higher highs, the stochastic prints lower highs. This is a bearish divergence, indicates a reversal. And after this, we saw a strong momentum move towards the downside. It still remains to be seen here if this will be a continuation after this sort of dark cloud cover pattern. But what you can notice here also is if we compare with the normal stochastic, you can see that yes, we saw a little bit of divergence here as well, but the signal came a bit later and it definitely wasn't as clear here. So if you are trading very short term, this can be a good setting to use. But the downside here is that, when we get so fast signals, it can potentially lead to more false signals as well. So it is a little bit of a trade-off. You will get faster signals, but perhaps the signals will not be as reliable. So have that in mind. And as always, it's not good to rely on a single indicator. I highly recommend to learn about market structure and price action as well. But alright guys, so now we are ready to take a look at our second stochastic RSI setting. And this setting right here, for this setting, I do want to change the chart to be a bit more long term, because this next setting we're going to talk about is a more long term stochastic. And as I mentioned earlier, even if you are a short term trader, let's say you are, a day trader, I still think this is important to learn. But let's go here to the Bitcoin chart and let's actually change all the way to the daily time frame. As we can see, Bitcoin is putting on a massive performance today. We are at an all-time high, 80,000. That's amazing to see. But guys, let's actually zoom out even more. I want to head all the way to the weekly time frame in order to really demonstrate the potential power of this longer term setting. So now we're looking at Bitcoin on a weekly time frame, and now we're ready to change the settings. So once again, we head down to the settings button for the stochastic RSI. And remember, currently we have the stochastic length of 5. We changed the settings earlier, but the standard settings is this 3, 3, 14, 14. So this right here is the standard settings. But for this longer term settings, we want to do a lot of changes. First of all, we want to change percentage K to 14. This will make the K line much more smooth out. So the signals will be a bit delayed, but at the same time they can be more significant. What we also want to do here is that we actually want to change the percentage D as well. This is not as important, but I'm going to change the percentage D to 14. So now the orange line or percentage D line will be a 14 period, in this case 14-week moving average of the percentage K. The RSI length is just the standard length of the RSI. One could argue that we might want to change this one to 21. But I'm going to keep this simple, keep the RSI at 14. That is the standard settings. But for the stochastic length, I'm actually going to change the stochastic length to 21. So now the stochastic indicator will look back at 21 periods in order to determine RSI's relative position. So these are the settings 14, 14, 14, and 21 here. There are of course different variations, and depending on markets and time frames, you might want to tweak the settings and see what works best for you. But this right here is a good sort of very long-term setting in my opinion. So let's actually click OK here and see how this one sort of performed in a long-term perspective. So the first thing we can notice, we can start to look out for, did this indicator find, for example, any divergences, any signals in the past? Well, if we take a look at the old Bitcoin all-time high, we can see that from this high to this high, we can see the price, clearly printed a higher high right there. But here on the long-term stochastic, we can see the long-term stochastic clearly fell to the downside. So here we had a sort of long-term reversal divergence signal. One thing that is important to point out about these long-term settings, and that should be understood by now, is that this one is of course lagging. But if you are such a long-term trader, the lagginess of the signals might not be as important as if you're trading on the very short term, like if you're a day trader, then lag is much more significant. But now let's take a look at if we found any other signals. Well, if we take a look here when the price started to bottom out, we can actually notice something interesting. We can see that here, long before the price reversed, right, we started to see the stochastic going in the opposite direction, right? So this is not a perfect signal by any means, but you can see here that the price definitely continued to push down while the stochastic started to reverse. So one can consider this a form of bullish divergence, right? Indicating a potential reversal to the upside. So here we had a slight divergence between the price and the indicator once again. Yet another interesting thing we can see here is that we actually got a buy continuation signal between you know, the low we had right here and the low we had right here. Here, the price printed a higher low, while what happened to the stochastic? The indicator clearly printed a lower low. And remember what this is. Remember from earlier in the course, this is a hidden bullish divergence. And what does hidden bullish divergence mean? Well, this is a continuation signal. So it indicates a continuation to the upside. So here on the weekly time frame, this stochastic performed pretty solid. But I do want to warn you guys about these settings. I do want to stress out that, first of all, these settings are very lagging. We're using multiple lagging factors. And the second thing I do want to mention is that, at least in my opinion, when it comes to the stochastic indicator, it can be a good addition, but learning about price action and learning about market structure and perhaps combine it with the stochastic is the way to go. You should never rely, you know, only on the stochastic indicator, at least in my opinion. All right, guys, so now the time has come to take a look at the third settings. And for these settings, we're actually going to go back to a chart we looked at earlier in this video. So if you have a good memory, you might remember this chart right here. And the reason I want to look at this chart is because now we're ready to take a look at some settings, or to be more specific, an indicator that gives us automatic buy and sell signals based on divergences. And this right here was the chart we used to I used to show you guys divergences earlier in the video. So let's use this exact chart and see if our indicator can also find these divergences automatically. So what we want to do now is that we want to head up to the indicators tab in TradingView. And now we want to search for Stochastic RSI and then divergence. Now, as we can see, multiple indicators will appear here on the charts. But the one we want to use here is the one here at the top, called Stochastic Divergences by Tista. I'm pretty sure this is the one, Stochastic Divergence. Yeah, it has to be that one. So just my bad here. Search for Stochastic RSI Divergence and then open this one up by Tista right here. So now, as we can see, the indicator has appeared here on the chart. Right now the indicator is yellow. It's a bit hard to see. So let me actually change a few settings. We go to the settings tab, we hit style, and let's change the percentage K here to black and make it a bit more thicker. You can see right now you can use a percentage D line as well. But for now, we don't have to display the percentage D line because this indicator will calculate the divergences from the percentage K. And this is one difference compared to what I did earlier in the video. I calculated the divergences based on percentage D. This will make the divergences a bit more sort of clear, but at the same time the signals will be a bit slower. So as always, or as usual, it is a bit of a trade-off here between how fast do we want the signals and how accurate do we want the signals. But for now, you can actually uncheck percentage D right here. But now let's actually head to the inputs here, because here you can see that we can change the settings. So if you want to combine the divergences with the settings we talked about earlier, you can change the settings right here. Let's say that you want to use the 335 setting, then you simply change the stochastic period to 5. If you want to use the 14-14-21, you can use that setting as well. But just to show you guys, let's keep the standard settings. So make sure to have the stochastic period of 14, RSI period of 14. Here, this indicator also uses pivot points to determine the highs and lows. So here you can also change the pivot points, but this is a little bit of outside the scope of this video. I can spend, you know, lots of time just tweaking the settings here, combine it with divergences, but for now just keep the settings as they are. I might, if you guys want to, make a video going deeper into this indicator in the future. If you want to see that, let me know, guys, in the comments below. But as I said, for now, let's just keep the settings as they are and click OK. So now then, did this indicator find the divergences we talked about earlier? Well, we can see right here, right, the price prints one low and then a lower low, and the indicator automatically identifies one low and then a higher low. This right here is a bullish divergence, indicates a short-term reversal to the upside. It also found the bearish divergence, so high, higher high, high, lower high, clear reversal signal, and after this the price completely collapsed. However, if we look at the next signal, this one is a bit shaky here. You can see we had one low. This was considered a low because of the pivot period, and then a lower low. So here we found a bullish divergence. So the signal is actually correct. This right here is a correctly identified divergence, but you can see that yes, we saw a tiny bounce, but this was actually a continuation towards the downside. So it is important to note here that not all divergence signals will succeed, and in order to improve the likeliness of the divergences succeeding, it's, as I mentioned before, it's very important to learn about core technical analysis concepts. Alright, so this video is coming to an end very soon, but first I want to thank you all so much for watching. I also want to give a big thank you to all our channel members. You guys make these videos possible. To support the channel, consider becoming a member by clicking join or simply drop a like on the video. And last but not least, when you are ready to continue your trading journey, I highly recommend checking out this playlist. It contains all the educational trading courses I have made so far, and more is coming very soon.